Okay, good morning, everyone. I figured I'd just get these charts out right away and really just let's look at where we're at after yesterday. And there were some false breakdowns. We're right at kind of some real key levels in many charts. So I want to just keep a focus on those. Leave me a thumbs up if you find value, or leave me some trash talking comment if you don't find value. Let's move on, get right into the charts. All right, so start out here with the tech sector cues, because we had Amazon and Google reporting. So they opened up this morning, and we'll look at those charts here in a second. Cues as of right now, the best I can make it is we had a false breakdown or a bear trap, and we're now back within this bearish rising wedge. So I don't see this as potentially like a large move to the upside. Because it is this bearish rising wedge and we're still holding that pattern. You can see right here, we've really got where we opened today was right at resistance and they sold it down, getting a little bit of a bounce here from this morning. But the point is we're still within this bearish pattern. All right, so until we break this pattern, it's a bearish pattern. It should trade down, even if you get the little false breakdown and then they recover it. Still doesn't mean that we're not going to break down again, and that time's going to be the real deal. So while it's a bearish pattern, and we're really coming close to the apex of this pattern, so likely going to resolve this week, but I guess it could bleed over into next week. We'll see one way or the other. Now obviously this could break up, could break down. The bearish pattern says it's likely to break down, and if I look at the daily with the negative divergences that have not gone away, they just continue to remain there, then the momentum's telling me we're going to break down as well. But we did have a false breakdown there, so something to throw in there and just keep an eye on. Let's look at SPY. All right, so nothing's really changed in SPY. I mean, literally, we're just doing a back test of that broken trend line. We haven't recovered it. So here's this bearish wedge, as I can't speak, coming off the March 2020 lows. And you've got this bearish rising wedge here. We've been wedging higher. As I zoom in, here's your breakdown and and your sell signal basically. And we're doing a kickback rally. We have not recovered that broken support. So that's still a sell signal, and we're just doing a back test. Looking at the, and if you look at the weekly, you still see today we're really at the same spot we were at yesterday. So even with all the good earnings from Google and Amazon, we really haven't gone anywhere on the S&P 500. We're pretty flat across the board. Looking at the hourly, this is where we're at now. You can see we broke down, we did a back test, broke down some more, running up. So it looks like we're going to do another back test, probably up here to 385.46. We'll probably get that today, but it's a back test of a broken support line. So, and the major trend of this bearish rising wedge is really the pattern that I'm looking at, not just the little move here to run up to 385, but really what does this big broken trend pattern mean? Does it, I think it's likely, whether we do a back test or not first, I think it's probable at this point that we continue lower because we're below that trend. All right, we're below the trend line. And if they want to back test for a few days, that's completely possible. That doesn't mean that next month we're not going to be all the way down here, and that's what I'm looking for. Small caps. So small caps, if you want to come off the March 2020 lows, you've got a trend line down here. We got two reactions kind of in this area on this daily chart, and we're well above that now. So I think it's likely that we come down at least to that trend line. That's going to sit, depending on when we actually get there. On the shorter term time frame, if we go to the hourly chart, you see we had this price channel that the small caps are trading in. We had one false breakdown during the holidays. Just kind of throw that out. Anything you see during the holidays, breakdowns or breakouts, oftentimes they're kind of outlying data because you don't have the full market there participating. The people are on holidays. So we throw that out. So we really just continue to have this upward price channel. And we broke. All right, we broke that price channel. And we had a sell signal, and we're just coming back up for a back test. But again, so from here, This is kind of no man's land. It's kind of the area of indecision. So it's not a spot you want to take a trade at. What I'd be looking for is really I'd be looking to short, but I would want to short all the way up here if I could get it. So I'd wait for a full back test of the trend line, and then that would be the area to take a starting short. If it starts working from that point, you could build on that position. That's how I would approach that. Again, I do think we're heading lower, down to that lower trend line that I pointed out. But I don't know when it's going to get there. We could get there all the way, way out here in time, and from here it wouldn't be that big of a drop. So we're just watching that. But as of right now, we broke that price channel and we're back testing. I think it's likely we're heading down to this 192.62, get some sort of reaction, and then run down and hit this trend line. Let's take a look at the long bond. We haven't looked at that for a few days. The bonds are not confirming any kind of a sell-off. There's no risk buy, risk off trade right now. There's no buying of TLT or the long bond or anything like that. So bonds are selling off a little bit today, making a new low. And you can see as of right now, this is a divergent low. So we have a new low in TLT, but it's on higher momentum. Now to confirm this divergence on the daily chart, you'd want to see the long bond start to turn up. This is something that I've been looking for in the long bond that we haven't had. There has been no daily bullish divergence. We do have that now. So it's not confirmed though. So you want to see this RSI turn up from here, which would mean that bonds are going to start to get bought up. And if it starts to turn up, then you do have that bullish divergence, which is really, this is a divergent price pattern right there. So what we'll look for is the confirmation on that. If we start to get that, that tells you that now we're likely to see a trend change in the long bond, which would signal a risk off sentiment in the market, likely to come with markets selling off and with the stock market selling off and bonds rallying. I'm really continuing to watch the dollar. Right now, we do have a breakout, and it just hasn't taken flight yet. It hasn't moved up. So we're continuing to watch this to see if we got a false breakout or if this thing's going to stick. Here's the DXY. We have resistance right here, which is now support about 90.95. And you can see that we've broken out. Zooming in, we've broken out. We kind of came in for a back test, starting to lift off, but now it's just struggling. So there's no catalyst right now to get this thing to start to lift off. So we have to watch this. It is a breakout as of right now, but if it comes back down and is able to trade back down into this area, then we'd call that a false breakout or a bear trap. That would likely signal, probably going to get a move up in gold, probably going to see, additional strength in the equity markets. But if the dollar can break out and continue to move higher, we should start to see some pressure on the equity markets. So this is an important chart that I'm really looking at. Also the dollar futures, they kind of look the same, but I'm watching both of those to see if we get some sort of a breakout in the dollar. As of right now, the dollar is uptrending. We hit the lows right down here back in January, and we've been making a series of higher lows, and we have higher highs. So we have an uptrend in the dollar, something like that. It's kind of making a bearish rising wedge, but it's not a very mature wedge, so this can continue higher. So we're watching for continued strength in the dollar and looking for the reaction, for the markets to react to that. Energy XLE rallying right into resistance of 40. It's about 42. We're just getting a rally right into that resistance level. So technically, there's no breakouts. Nothing's changed. It's just a rally into resistance. We're still kind of within the range, 42 being the resistance and 40 or 37.61 or so being support. We're just at the top end of the range. So this is the area where this should start to get rejected, and likely I think we're coming down to the lower end of this range. Possibly even down here to 34.25, but I do think we're going to make our way down to this 37. after we test the upper end of the range. Looking at the daily chart on XLE, let's get rid of this bullish divergence that we had back there as our buy signal. But look, we have lower lows in momentum, and we have, we have a higher low in price, but momentum still signals, momentum often leads price. So momentum is still trading down, trending down basically, and I don't see any reversal or signal that we're going to continue to move higher in price. And so I think this is kind of the end of the road, somewhere right around here for the rally in energy, and we're going to turn and go lower. That's what the momentum's telling me. Volatility is coming back down. So again, as of right now, this is a false breakout in volatility. There's no other way to really look at it. And we're starting to come back down. We've got support down here at 1030, about 1030. So we'll have to watch if we get down to that level. I'm not sure we will, but if we do, there's a higher probability at that point that we actually start to break lower. And so something to watch. Doesn't mean we're going to. We might not get to that level. The buyers might step in and rally this thing higher. But right now we have a false breakout. So we have to continue to just watch and see what we got and figure out when to exit a position if it's going to, if we're going to get that breakdown. Just a quick look at the FANG stocks. As of right now, to me, they look relatively strong. And they, really Microsoft, you can see here, we had this trading range that we were in for quite a while. We got a breakout, and as of right now, that looks like it's a confirmed breakout. If Microsoft's moving higher, it's going to be pretty hard for the tech sector to come down. And if the tech sector doesn't sell off and come down, it's going to be pretty hard for the stock market to come down. So just keep that in mind. I'm seeing strength in Microsoft. Until we see weakness, we got to take it for what it is. Looking at Apple, Apple's not showing me the same kind of strength, but it is hanging in there, so this could easily move higher. We do have negative divergence here on Apple. You can see it's pretty good confirmed negative divergence. So, that tells me we're likely to break down, but we need to see Microsoft really start to break down as well. Apple's not going to come down without Microsoft, most likely. So watch those. And then looking at Amazon, Amazon is not really going anywhere after good earnings today. It's basically flat. We do have a breakout from this downward price channel right here, but it's still too early to tell whether this is going to hold or not. So it's not an impulsive breakout, and they're not buying it up today. They're actually kind of selling it off. You look at the hourly, they're kind of selling that off. So let's watch to see how the day closes. Google looks relatively strong as well, up 7%. And, Google has this bearish rising wedge pattern, and we're breaking to the upside. Looking at the daily chart, we still have negative divergence. There it is. It's just extended, so you just kind of adjust that. But it's not confirmed yet, so we need to see Google sell off, turn down, see the PPO start to turn down and the RSI turn down to help confirm that. And if that's true, then this is a divergent high, which is what I think this is. I think this is a high that's going to fail. Why do I think that? Well, we have negative divergence. We have a bearish pattern. They break it to the upside, run a bunch of stops, and then it sells off. That's typically what I see with these chart patterns. But until we see it, it is a breakout. So keep an eye on that one. Okay, let's get into some of the individual trade ideas. And again, if you guys want me to look at anything, leave a comment below. If you see an interesting setup, I'm always looking for different ideas. Not all ideas work out. Some do, though. And when they do, we manage the trade. Hopefully, we're able to cut our losers short and let our winners run. Nike. All right, so Nike, I added relatively substantial position, short position, to Nike when we just got this recent bounce. Here's what we got going on the daily chart. We'll start there. So resistance on the daily chart was sitting right about 138.77, and then we bounced off this recent support right here at about 131. Ran right up to that resistance, Had a little bit of move at this kind of secondary resistance, but ran right up to here, overshot it right there yesterday, closing above, looking bullish, but today they're selling it down. So let's see where this closes. If they can close this back above this resistance line, we get that daily close back above, I'll cover that short position pretty much at break even, maybe for a very slight profit. But going to the hourly, you can see what we're doing right now. We broke down in the first candle, and every other candle since has just been chopping around below resistance. So it's struggling to get back above. I think it's likely if we can't get back above soon, we'll probably start to continue to break down. And this bounce that we just had was just a counter trend bounce in the downtrend that we started back when we broke this bearish rising wedge pattern. So here's your bearish rising wedge on the daily chart on Nike. Had a couple tests to the upside that both failed because they were divergent highs, and then we've broken to the downside. We're getting a little bounce, but I think it's likely we're going to continue the downtrend. That's the bet that I'm making. I think we've started a downtrend. We're going to continue this downtrend. Rips, it's a sell the rip market, at least in this sense on this stock. And I'm looking to add to shorts as it rallies higher, and so that's what I'm looking for on that one. We'll see if that actually works out. We get down to here, we're going to break 131 most likely, heading down to next level of support. Looks about 126.34. Below that, we've got some support at 117, and below that, kind of the final target, at least for this trade, is probably right around 100. This major trend line goes all the way back to 2009. So there's your bull market in Nike. We undercut it briefly with the COVID crash, and I think it's likely we come down to test that major trend line again. PayPal, so let's see where the day closes. This is a daily chart, but what we have is we've got a trend line, kind of a secondary trend line right here. On the daily, we've tagged that, held that support, broke it right there. There's your sell signal because you got a breakdown, daily close followed by a confirmation candle. So another more selling. That's a confirmation, and then we're getting the kickback rally right into resistance. And you can see if I go to the hourly chart, how this is behaving right here. So PayPal, we basically opened higher above this support. They recovered the support right at the open, and the sellers came right in and smashed it right down. So that just shows you the behavior. Now, what do I expect? Well, we could run up and tag it again, then roll over. We could recover it, but if we were going to recover it, likely if they're going to have a bear trap on the gap up this morning, they probably should have ran it higher right at the go. Just gap up and run. That's how you set a bear trap. Is you gap up and then run straight up, and they didn't do that. They came in and sold it down. So. To me, this looks like a back test of resistance. I think we're heading lower. Looking at the daily, big negative divergence right there on the daily chart, signaling that momentum is to the downside. Now we're just waiting for price to confirm. Qualcomm here has a very similar chart as of right now as PayPal. We're looking at an hourly chart. So a couple things to look at on this one and a few things to watch. We're right at a kind of a key level. So we have this uptrend line on the daily chart. There's your uptrend line coming off the March 2020 lows. Nice clean price channel that this thing was walking up. And then we started to put in negative divergence. It was obvious that all this price action is divergent high price action. We continued to put that negative divergence in until we broke trend. So there's your breakdown. Now we didn't get confirmation. That's one thing to note. There wasn't full confirmation, and since then they bid it up yesterday, closing back above that broken support line. So we had recovered that broken price channel. So today is going to be very telling in terms of what this is, whether it's a false breakdown or we're just rejecting. They made it look yesterday like it was a false breakdown. Today, if I go to the hourly, let's look at the hourly. You can see this morning they opened it up way up here at 167.49. Everything looked great, like it was off to the races. and that Qualcomm had recovered its price channel, and yet they came out and sold it down back below that trend line. So as of right now, we're below support. We're tagging it, we're testing it, and we're not able to recover it within the first few hours of the day. Wait, look for a rejection, or look for the selling to be impulsive on the way down if it's going to, or a recovery and we get the daily close back into the support channel. That's really what I'm looking for. As of right now, to me, it looks like we're going to reject and head lower, and this was just a false, kind of a fake out move where they, rallied it back up for a back test, make it look good, make it look like it recovered, and then they reject it. But we should see that impulsive selling, and unless we get that, this could just continue to kind of dance around and then finally recover that support line. Daily close on this one's going to be important, so you kind of need to wait to see where this day ends up. Zillow Group, no change in Zillow Group. To me, this still looks like a bearish chart. We're doing a back test. We broke the trend line. Here's your trend line support right there. And there's your sell signal where you get the breakdown of support with confirmation. So that's about as good as it gets. You can run up and do a back test. Again, we're just back testing broken support. Support, once it's broken, is resistance. So we, I think it's likely we roll over and fail. Whether we run up and do, back test a little more, I don't know. But looking at the daily, big negative divergence on this one, and we're just waiting for price to start to confirm. So, if you wanted to wait on this one, or if you're really looking, I guess you could wait for maybe a break of this gap fill right here. This trend line that I have, could probably move this down to it's kind of chopped through it a little bit. It's somewhere in this area. You could wait maybe for a 146.50 close below to help confirm that on the hourly chart. But again, to me, it looks like it's just backtesting and it's going to roll over. Citibank here. What I did when I saw this bullish divergence right here on the hourly, I covered my position, but I still think that's just a short-term thing. It looked like we were going to get a little bit of a bounce, maybe up to this resistance line around 61.70. But I think that's likely the spot where it gets rejected. This is just short-term stuff on the hourly chart. If you look at the daily, I don't see anything in the chart here on the daily that tells me that the downtrend that we started back here mid-January is finished. So we've been moving down. We're kind of getting some chop zone right in here. And, maybe we run up and do a back test. But the thing is that we still have negative divergence. There's no bullish divergence on the daily chart that tells me that this trend is over. So short term, yes, we saw that bullish divergence on the hourly chart, but I think it's likely that after the back test, we continue to roll over down to about 53.50 is the next level of support. We break that, we got 49.20. We break that, we've got about 38.50 or so. Those are the three levels I'm watching. Do we get all the way down there to 38.50? I don't know. Obviously, the lower, the farther away a price target is, the lower the probability that it'll be hit. And so the way I mitigate that probability going against me or decreasing is I take profit as I start to hit, as I start to hit these support targets or profit targets, I start to take profit. So that by the time a trade gets all the way down maybe to a final target, I don't have a full position. I've locked in profit along the way. That's a pretty standard way of mitigating risk as a trade starts working for you. That's all I got as of this morning. Obviously, lots can change throughout the day, so I just wanted to lay those charts out, give you the trend lines that I'm watching, so that if you see some reactions around those, you're able to at least know possibly what's going on. So everything in this channel obviously is just my opinion. Everything, all the lines are my how I see the charts, and that's it. I'm not a financial advisor. So thanks, guys, and I'll catch you guys on the next one.